So today we're doing something a little bit different. Obviously, as a channel that focuses on the stock market, finance, this is going to be a little bit different because it's going to be a bit more political than what I would normally do. But at the same time, it's a pretty quiet day in the stock market. There's not really that much to talk about, potentially maybe Card Factory earnings. But I thought I'd talk about this, and a few of you guys have requested that I talk about this, which is talking about the budget that came out last week and my thoughts on it, and potentially any changes that I would have made personally if I was given the option of being the Chancellor. So yeah, something a little bit different. I hope you enjoy it. So we'll get stuck onto it. So it was published on the 23rd of September, and this was the budget that came out, and this was a key budget. This was going to be a budget which they called the growth plan, which was to kickstart the economy, but also was very important to help the average household. The average household is under pressure at the moment with food costs, energy costs, going to the pump is so expensive nowadays. Energy costs, the mortgage payments, because obviously so many households are coming out of their fixed mortgages at the moment or on variable, and their mortgage payments have skyrocketed. So it was a really big part of making sure that the economy gets back to growth, and also making sure the average Joe, especially the lower income earners, a lot of the lower income earners are giving them support, which has very much lacked in the UK for the last few years. But also being careful that because of the huge amount of increase, that we don't have the working class, the middle class, them getting squeezed so tight in the budget that they start struggling as well with day-to-day life. And as well as that, the big thing that I never think gets enough attention is that quite often there's so much focus on the higher income and the economy and getting the higher spenders to keep spending in the economy, that so many people don't realise that the backbone of the economy is the working class. It's the middle class. The working class and the middle class are the group of people that is such a big group of people that will, if they have the spare money, they will go out, they will go to the local restaurant and spend money at the local restaurant. They will go out for days out and go spend time at a local business or what have you. They will go and spend the money in the economy. And if they start getting squeezed and they are the big spenders and they go, oh, you know what, we're getting squeezed, we can't go spend, that is what affects the economy and businesses the most. And that is quite often the big area of income earners that I never think ever gets supported enough, and the secret backbone of the economy that people don't talk about. And I think that really what should have been really focused on them. And I'll make a few more points when I get down in the video, but I think that's always something that's neglected. But getting on to the budget that was here, there was a few key points to start with, which was what they called the new growth plan, which was tackling energy costs, which is a topic for another day, to bring back down inflation, backing businesses and helping households. Corporation tax rise cancelled, keeping it at 19%. So that's obviously a thing that will help businesses. I think businesses probably will need a bit of support at the moment. Obviously there's a bit of a slowdown, they're having to deal with a lot more energy costs, they've been affected by logistic costs as well, so not a bad way of helping businesses. Potentially there was other ways that I think that could have supported them, but wasn't a terrible idea. The basic rate of tax cut to 90% in April 2023, 1 year earlier than planned. So this was a bit more, with 31 million people getting an average of £170 more per year. So the thing with this is that, it's April 2023. The big thing is that the government really needs to help people now. People have been affected in the last, especially like the last 3 months. I would even say the whole of 2022, but especially the last 3 months of costs. Whether it be at the pump, food, energy, interest rates. A lot of people getting impacted now. And for me, this wasn't a big enough support package for those basic rates. Those sort of people that are in that kind of 12,000 to 50,000 category, not a huge benefit for them. And I think that really did lack from that statement there. I think it wasn't terrible, but I think it should have been a bit more than this that was offered. So the first thing here was they were going to help stamp duty. So they were going to raise the threshold where you pay stamp duty. Now, obviously this is to help the housing market at the moment. Now, this is going to be from someone that owns house builder stocks. I thought this was a absolute terrible idea, trying to help the housing market. The housing market at the moment has been absolutely insane. Look at the sharp rise in the house prices. At some point, the house market will have to crash. It's gone through an unsustainable rise in prices and sales. Don't support the housing market. Let it come down. It's already priced in that it's going to come down for a lot of the stocks in the house builder market. It would be fine for the housing market to have a slowdown, for it to bring down the prices. That'll be absolutely fine. There's no point supporting the housing market at the moment. And the way to do it is not by the stamp duty. The people that can still at the moment afford houses are not the people that this package and this budget should have been towards. They have far more disposable income where the stamp duty will not really affect them. Why are the average person at the moment not buying houses? Well, it's because the interest rates have gone crazily up. And you could argue that the interest rates at the moment are back at historic averages, and that we should probably get used to these sort of interest rates and not have free cash anymore. That's a total topic for the other day. But to do that, you've got to slowly go up on the interest rates, and we've just had a sharp rise because of inflation. So the big way that the government needs to be dealing with this, and the Bank of England needs to be doing this, is by bringing inflation down, bringing them interest rates back to reasonable levels and increasing them at okay amounts, not by jumping interest rates at crazy amounts overnight. And that's what needs to be tackled at the moment. And that's what will help the housing market when interest rates go back to a realistic level. And if they are going to go up a lot more, it's a slow and steady progress, not where it's been hiked up to battle inflation. So at the moment, you've got to let the housing market go through what the housing market's going to go through. Then we tackle with the interest rates, and that's the big thing that's going to help everyone at the moment. Having more reasonable interest rates, and interest rates that if they are going to go up or go back to historic averages, you do it over a slow period of time. And that's a lack from the Bank of England being slow to hike up interest rates previously, and too much support in the housing market. I remember the housing market the government gave the housing market the stamp duty relief last time. There was no need to do it. The housing market was strong. Everyone came off the COVID years with so much cash locked up. They'd been saving loads of money. The housing market didn't need support. People had been unnaturally saving at the time and had loads of money to go spend. And this is a bit of a backlash because we had such a poor idea before and a lack of interest rates before when we had a stable economy. So that's what needs to be really tackled in this sort of space here. And it also mentioned about tackling which we've already had previously, which was the energy price guarantee, tackling the increase of energy. Now this is a video on a total topic and it's nothing new for the budget, but this has been so badly handled by the government. There needs to be more done. As well as needs to be more done, the government aren't helping things. And when we have now so much renewable electric, and that renewable electric is still getting charged at like the wholesale price of like gas, which is so more expensive, that needs to be sorted out, and that comes from the government tackling that situation. But that's another topic for another day. But obviously that's not being very dealt with, and that obviously when you have the increase of interest rates, and that's obviously affecting people with mortgages, and then you also have the energy bills going up, that's obviously causing so much pressure. But yeah, that's obviously something that's not been great as well. I also mentioned about the NI contributions going down, which was reversed very quickly. There was also more about, which wasn't on here, about bankers' bonuses and the cap getting taken off, which I thought was another really bad move in this budget here. It also mentioned about outlining support for pubs and hospitality, which needs to be more than this. This area has been absolutely killed in the last few months. There was a lack of support through the CV situation. You know, a lot of leisure places were basically shut for 2 years, and more than any other spaces, and they got no additional support. So a little bit of support here, probably not as far as what it should have done, but at least there was some support, I guess. And as well as that, the biggest benefiters and the biggest cut here was the income earners on the additional rate of tax, which was scrapped and was replaced with the 40%, the higher rate. So for us in the UK, we have a tax system where if you earn up to 12,000, there's 0%, 12,000 to 50,000, 20%, 50,000 to 150,000, 40%, and if you get over 150,000, you get 45% tax. That is going to get scrapped, so everyone over 150,000 gets 40%, just so this cap's gone. So above here, instead of up to 150,000, that goes unlimited above that. So everyone down here now gets that 40% rate. So really the biggest benefiters of this budget, the ones that got the biggest tax cut, a 5% tax cut, was the additional rate income earners, which was unbelievable, because in this time period, the incomes that are getting affected the most are the basic rate. Now everyone below that, obviously they've been lacking a lot of support for a long time from the government. But what we're having at the moment is we're having this income really getting squeezed because of food prices, energy prices, the mortgage payments are going up hundreds of pounds. And really the budget should have been based around these guys and supporting them. And it wasn't. The people that walked away with the best support from this area was the additional rate payers, which is absolutely crazy because for them guys, having a energy bill that's maybe 2,000, 3,000, 4,000 higher, when you're earning 150,000, you don't really feel that increase. But if you're in 12,000 to 50,000, you can really feel an increase of an energy bill by that much. And then you top that off with any other cost. And that is really the income that should have had the biggest support in this area here, which didn't. Now, personally for me, I've never been a big fan of the UK tax system. I don't understand why we jumped from 0 to 20% to 40% to 45%. It's just a crazy jump, and there's no way someone that earns 12,000 has the same lifestyle as someone that earns 50,000. The same way that someone earns 50,000 has the same lifestyle as 150,000, and I don't understand why someone that earns this much pays the same as someone that earns that much. For me, there should always be more of a staggered tax system in the UK. But getting on to the point here is to have the best cut for those earners, and the government are trying to base this around like a trickling down effect where those people that earn the most money are the backbone of the economy. They're the ones that are going to go out and spend loads of money, and that will trickle down the ladder, is absolutely bonkers. Now, there is a point where it is important that these guys do go spending the money and are in the UK spending money. But the big thing is these guys haven't been affected that much. There's going to be some impact, but not as much as these guys. These guys here have seen income squeeze that much in the last 3-6 months that these are the guys that will go out and spend at the local businesses. These are the guys that will go out and support the local businesses, and it's such a major bracket. Those are the ones that you want to be making sure are going out and supporting the economy still, instead of not worrying about energy costs. And those are the ones that should have had the better end of this budget, not these guys. And that was a major error, in my opinion, with this budget here. And also there's some news here about also improving the infrastructure here. And also there's going to be some changes in here where the investment pension funds will be more focused into UK assets. So overall for me, my opinions on the budget was that it was a pretty poor, or a budget that didn't support the right people. At the moment, there's a lot of people here that are getting affected by their energy prices, gas prices, their interest rates going up, their mortgage payments going up. And it was more supporting the average Joe, the working class, the middle class, and making sure that they aren't struggling as well. And in my opinion, what would have I done if I was a chancellor in this situation? Well, I think personally the key thing was to make sure people aren't worrying about their energy bills or extra costs, and making sure that them costs come down, inflation comes down, and then interest rates can come down, and then people are still going out and spending in the economy. And to do that, there was a few key things that I would have expected. First one for me is making sure they have more money to spend. One way to do that is personal allowance. So this is what you earn up to £12,570 does not get taxed, and also helps the lower income as well. And for me, this should have seen a massive increase. This is where we should have seen the 5% increase in that threshold, and people have more tax-free cash, and that comes in instantly. And if that has already been paid, that is being refunded, or if it hasn't been paid, then obviously this year, then that is not happening, and you have that reduction already in place this year, and potentially going into next year, potentially even a 10% increase, but I still expect a 5% increase. This would have benefited households by a massive amount, and that would have been a few £100s to support the raise in costs at the moment. The next thing for me is tackling interest rates. Interest rates need to come down, so that needs inflation curbing, and then bring interest rates down to a real better percentage. Now, there's not much we can do there because interest rates are getting put up because of inflation, but inflation could have been tackled better, and interest rates should have been at a higher rate going into when we had a good economy. So that can't really be tackled here because that's errors made before this budget. The next thing is tackling energy costs. I would make sure that we are not having renewable electricity priced on the wholesale of gas prices and having them higher energy costs. That obviously needs to get managed where we are getting actual cost of that power priced on the actual power that it's costing. and that stops as well energy companies making money on gas prices when it's renewable electric, and also supporting that renewable energy growth going forward. And that's key to do it, that we have more renewable energy in the UK. Another thing that I personally would be looking at is having cuts in the tax of petrol. At the moment, the UK government currently makes a good amount of money off the UK petrol prices. Now, I would be looking to cut them taxes on them petrol prices, and that would also mean that so many more people can afford the petrol prices. The everyday person can see a reduction in their cost and be more happy to go out and spend money and have a bit more confidence if they see that price reducing. Now, obviously oil and gas prices are up quite a bit at the moment, so that would still need to come down, but that would at least support people in the short term and give them more confidence in the economy to go out and spend money if they're seeing that cost come down. Now, the other tricky thing that we do see here is that the companies that sell the petrol do not reflect that in the prices on the pump. So this is one thing that I've always said, is there needs to be more regulation. They are bringing the prices down. We have seen very much in the UK at the moment, there is the delay from the cost of that getting towards the pump, and when that's exported, when it reaches the pump, there has been a massive delay. And we saw this previously, is when we last had the tax cut on the pump, we didn't really see it reflected in petrol prices. There would also have to come regulation in to make sure that a lot of these stations and pumps were reflecting the correct price of oil, which it should be, because even now at the moment the reflection hasn't come in with the mass reduction and also with the tax cut, and that needs to have more regulation in, and that would be something further down the line to be looking at. But that would be also another way that would help the average person, pretty much everyone, and give a bit more confidence for people to go out and spend some money. So that's a couple of my suggestions. There's a few more that I could have maybe stuck in here, but I won't make the video too long for you guys. So overall, that's my thoughts on the budget. I thought it was a budget that definitely helped the taxpayers in the additional rate massively. I feel like for everyone else and even businesses, maybe not total support for businesses. There was a bit in there. Maybe they could have gone a bit further, but I would say for the average income, for the everyday person that's going to go out and spend money and have that free income to go support the economy and local businesses, I personally didn't think there was enough in there for them, which was very disappointing to see. So yeah, that's my video for today, guys. Hope you enjoyed it. Something a little different, and I'll catch you in a bit.